what? We are going to kickstart the morning as always with a look at how global markets closed overnight. And it was somewhat quiet on markets, no?
In Asia, but US, of course, was chugging along very nicely because it's actually the thick of results season. We'll be going through some of the numbers later, especially for the tech names. But the Dow was up 0.4%, S&P 500 up 0.5%, Nasdaq was up 0.3%. Now, of all the markets we cover, only Japan was open, so the Nikkei 225 was up 0.3%. But Hong Kong, China, Singapore, Malaysia, we were all closed for Chinese New Year.
All right. For some thoughts on what's moving international markets, we do have on the line with us Michelle Schneider, Chief Strategist at Market Gauge. Mish, good morning. Thanks so much for joining us today. As expected, the U.S. Fed held rates this week. What did you glean from the Fed Chair Jerome Powell's Fed press conference after the FOMC meeting?
Well, first, I want to say Happy New Year to you. So I don't want to start without that. Um, well, yeah, I mean, the expectation that he would not raise or lower was certainly met. Nobody really thought that they were going to do much, and it makes perfect sense, obviously, with the beginning of the administration. But I did think that it was interesting that he sort of made the suggestion that if he had to be given a choice between slowing economy or rising inflation, he would want to support the economy and not worry so much about that 2% target. And he was using specifically the job market as his example. So if we do see the job market slowing, then perhaps we'll see a different outcome from the Fed.
What is your then expectation for how the Fed will, with their monetary policy for the rest of the year? Because the markets initially, I think, started with perhaps 4 cuts and 3 cuts, and now there's even talk of maybe even a rate increase.
I don't believe that, actually. And of course, the other thing that Powell said that you just played the clip before was that they're going to wait and see. And I think that makes a lot of sense because we don't really know what the policies are going to be as far as Trump, how far they're going to go with tariffs in particular, even though he's talking about them now. We know that he often says things that are very hyperbolic in order to start some negotiation. So the fact that we don't know that, but what we do know is that if the GDP shrinks, if manufacturing doesn't expand, if the job market starts to soften, if the housing market softens, if any of that comes to pass, they could surprise with a cut in March. And that's kind of what we're looking at right now if things start to fall apart a little bit in the economy.
Can we also just get your views on the tech results that have just come out? We've of course got Apple and Intel that just came out a few hours ago, and then Microsoft and Meta that came out yesterday. Where do you think the tech sector is heading against this backdrop of the DeepSeek?
Well, it is, yeah. Well, first of all, DeepSeek, and there's so much controversy about it. My feeling is that it is actually probably a good thing, number one, in that the talk of China having been done, as they would like to say in the West, and was in serious trouble, I knew was an exaggeration. And so DeepSeek comes out and it takes everybody by surprise. I think it'll be healthy competition as a result. So how that affects the tech sector and what we're seeing in the earnings is incredible in that, like yesterday, for example, I'm talking about the 29th here in the US, you had Tesla come out with not so great earnings. It dropped and then immediately turned around and rallied. You had the same thing with Microsoft with yesterday. And now today, Microsoft did actually go down. Tesla kind of held. And now Apple comes out, not great on the phone sales. What happens? It goes down in the after hours, immediately gets bought up. So we still have very much a mentality here of buy the dip, particularly in those tech stocks. So how that plays out, I actually believe that they don't have that much more earnings potential at this particular time. Tariffs, of course, could be a factor. If they flatten out in earnings, we could be seeing them peak at these levels, and a lot of speculators, retail market, getting disappointed if the market starts to drop.
In that sense, then, Mish, which areas or which sectors would look attractive if and when that happens?
Well, if the tech falls, of course, we don't necessarily want it to crash. That would not be good. We're looking then at a dot-com type bubble situation from 2000. So that's not what we want. But what we do want is if the economy is really going to grow because of deregulation and lower taxes and reshoring, and the tariffs actually have a more positive effect, we don't really know any of this, then I would be looking at things made in America. I would be looking at the small cap index, which would be through the S&P 6000 or the Russell 2000. I would be looking at tech that is more in the software realm, like IBM had incredible earnings and then not only gapped up, but stayed that way. Salesforce, Alibaba, if you're going to look out to China, has made great strides in the last couple of days. So you'll see opportunities more inside the U.S., and then, of course, probably some of the emerging markets as well, those that can sustain tariffs.
Yeah. Is it definitely still a story of developed markets though, as long as the US dollar remains strong?
Well, now that's a very interesting thing because the dollar was starting to weaken. And then when the tariff announcement came out, the dollar immediately strengthened. But yet the relationships, you have to remember the market is not the economy, right? Just look at Germany as a great example. They're facing recession, and yet the DAX has been on new all-time highs. So a lot of it is really going to be what happens, I think, with the interest rates, maybe even more so than what happens with Trump policies.
And can we take a look at the commodity space? Because we've seen broad-based strength in various commodities this month, such as gold, copper, oil, even soft commodities like coffee and corn. Where do you think the commodities are going? And will this be an influence on U.S. inflation?
Well, yes, I definitely think that certain commodities, obviously we saw a new all-time highs in gold. Silver is starting to pick up. The food commodities, a lot of them, well, coffee's been on new all-time highs, live cattle. We now have wheat and corn and soybeans looking very much like they've bottomed out. So the question really is not only is there great opportunity in the commodity space, and people who don't want to trade futures, there are ETFs for pretty much every big commodity, but also can the Fed control that type of inflation with raising even 0.25% or 0.5% without killing the economy? And the answer is no. They would have to go like Volcker style. And I don't think under a Trump administration that's going to happen anytime soon. So we have to watch. Deglobalization, inflationary. Weather issues could be inflationary. Labor issues, inflationary. Tariffs could be. Supply shortages. And all of this is setting up for a commodity cycle.
And if that's back to that question, if there's a commodity cycle, invariably prices of food will go up. And of course, that will impact a lot of American consumers, which is the broader economy. What does this then mean for U.S. growth and then the Fed ultimately?
Well, in terms of, yes, the consumer, by the way, with GDP numbers, the consumer was still very much a robust part of GDP. So this is where it all kind of gets connected. If the Fed at this point is worried about the consumer because of rising food prices in particular, or tariffs, rising the price of goods, we just saw that our trade deficit, we're still importing way more than we're exporting here. So if the Fed gets spooked and they lower rates, then that may not control the inflation part, but that would certainly possibly help some of the consumers that are maxed out on their credit cards right now. So it's a very delicate dance that the consumer has. They're still very optimistic, as we can see in the numbers, but at the same time, there's a lot of expectation for higher inflation, and the Fed is just sitting there, and maybe that's the best thing for them to do right now.
Mish, thanks very much for speaking to us. That was Mish Schneider, Chief Strategist at Market Gauge, giving us her take on some of the trends that she sees moving markets in the days and weeks ahead.